coming out much more and getting institutional capital raised from institutional LPs. Having said that, it still seems like the opportunity in Southeast Asia is still going to be country-focused from our point of view, whereby the manager will largely focus and develop team in and strength in a particular geography. They may want to capture some of the Southeast Asian opportunities, but still feels like it has to be still anchored in one key geography. And that's where we think the market is heading to.
Okay, we're really pressed on time, Chairman. Can I have another 5 minutes? Okay, before I want to open up the floors for questioning, I'm going to go around the panels to pick a country in Southeast Asia that would represent the most potential, starting from Joy. One country.
Sure, I think definitely Indonesia. We've seen a lot of activity, at least from our office, out of Indonesia. Yeah.
Peter?
We're picking 8 countries.
A country. One country.
One country, okay. Yes, I would agree with. Do I have to give a different country?
No. It's free, and not because I'm Indonesian, so you have to pick Indonesia. But Ben would agree with me. But please pick your selections.
I would also say Indonesia because
not just to be nice to me.
That also, and now that you mention it, but we do have. Out of Southeast Asia, I say our focus would be, if had to be one country, it would be Indonesia.
Mr. Fujiyama?
Okay, I need to find out other countries, but actually we have the one fund in Vietnam, so we now try to set up another fund target in Vietnam. So maybe I can say Vietnam and Indonesia.
Okay. Jeff?
Well, just to be a little different, Singapore is interesting, and here's the reason why. Because we make investments in countries in companies that target to be regional to start with, and Singapore is a good melting pot and for that. That being said, the most important markets in most of the companies that we invest in is Indonesia.
Very diplomatic.
Standing today, it has to be Indonesia. Long term, obviously, looks like Vietnam is right there.
Okay, thank you, the panelists. I would, before I open up the questions to the floor, I would, Dr. Bastang mentioned about Berlin, whether it will be there. I remember about an economist saying something about Southeast Asia, whether Southeast Asia will be the region of the future, and 10 more years from now, it will continue to be the region of the future. So with that, I open up the floor for questions. Can I have Calvin?
Hi, I'm Calvin from Partners Group. Not so much of a question, but trying to put Southeast Asia in the perspective of the investment landscape. I think definitely from an LP global investor point of view, Southeast Asia, I mean, definitely has a much longer history in terms of private equity compared to China and India. But unfortunately, I think as the panel and many people know that performance track record has not, lived up to expectation of most investors. So I think what I would say is maybe to give some suggestion for most of you here who are, focusing in Southeast Asia. Of course, I think until our government, Southeast Asia government, can be united as one bloc, then we can resolve that macro issues. I think that is what's the fundamental problem for Southeast Asia, where investor has faces the challenge of diversity in terms of the politics, macroeconomics, cultural language and all this. So, but I think from the bottom up, we can leave it to the government at the top level, which we can't do much. I mean, besides, each of you have your own personal lobbying and influence you can do. But at least from the bottom up, as being the people at the ground level, at the GP, maybe back to your question, what we can do here is, I think Southeast Asia, one is that from an investor point of view, I think investor generally has a lower expectation of return for Southeast Asia versus China and India. So I think from a GP point of view is we have to try to manage the so-called underperformance, right? So to make sure that we have less losses, lower underperformance, because in China, so far, for example, we have invested maybe about 10 over managers in China. And today, even despite a short history of, I would say, maybe 6 years, we have at least three funds or 3 managers that have one single deal that can return the whole funds. And I would say these 3 funds itself, so far, even they have not fully exited, but our expectation is that they can at least give us 3 to 5 times the return in China. So today, how many funds in Asia or Southeast Asia can claim that type of performance? So I think in Southeast Asia, I think maybe to the other audience here, ask the question, what's the expectation of return, right? So I think in Southeast Asia, if our GP can consistently achieve a return of about 2x or 2 to 3x, I think that is probably good enough, globally. If you can, I mean, you can't be the best, in different markets, but I think if you can consistently give about 2x return to a GP or to investors, that is probably acceptable by I would say international kind of benchmark. Of course, it can vary different over cycle, but if you can consistently say that I do not have losses where I can probably even can't return the capital, or only return barely above one-time cost, then obviously it doesn't make sense for most investors to invest here. And also because I was formerly the chairman of SVCA, right, in Singapore, and also because I used to be in the government to some extent. So I think what I also like to see is that I think in Southeast Asia, definitely it's more challenging from an investor point of view. So I think most of us has to be probably a bit united, just like what the government should be doing, to show more, like I say, more profiling, of the successes and the deals that each of you are doing in Southeast Asia. Because I think in China, India, I think the private sector, the so-called the private equity journal, has enough attention, they will publicize that. But in Southeast Asia, I mean, from the economy of scale, right, efficiency, not many people wants to do that job, to publicize. So I think whether it's association or publication, whatever, or among the GP himself, I think each of us should try to volunteer and make the effort to make, your investment, the deal transaction, information, statistic, performance, whatever, to be more visible, so that people will hear more about it and people become more aware. And also, I think in private equity in China, India, as you know, it's much more, hot and fast-paced. So I think many of the GP, as an investor, I am concerned that a lot of the GP that there are not building capabilities. So whereas in Southeast Asia, I think things are a bit more moderate, more longer term. So I think the GP here, I can see that a lot of you are probably much more older than the GP in China. And I think Southeast Asia GP, I think, has the potential to, and the time also, to build really capability, operating experience, be more hands-on. And that's what it's really private equity is about. Well, in China, I think people are already running. They don't even have time to look after the portfolio company. They're all chasing after deals, right? And trying to find exit and flip the company. That's right. So I think in Southeast Asia, I think we are in the kind of, I say, in the time, pace where we can make the effort. But obviously, all this takes time. In private equity, it takes time, right, to produce the result in long term. So I think a lot of GPs should be mindful that you may not be very successful and big in fund size, but if you can consistently perform, I would say close to 2x, over different cycles, and you can show that you really add value and create value in your portfolio company, helping company and minimizing the loss, the loss ratio, I think then you become a more convincing story over a longer time. Yeah, that's my feedback.
Oh, thank you, Calvin. And we know that there will be an ASEAN economic community by 2015. So I think the government is doing work to integrate the economies. I don't know whether it will be a European Union style or whether we would have a single currency. If there is a single currency for ASEAN, probably will be called ASEANA or ASEORO or something like that. Thank you, Calvin. Very interesting remarks. Any other questions? I have space for 2 more questions. One at the back.
Hi. Sorry, it's Suraj Luke from Vortex. Can you talk about talent acquisition of fund managers in Southeast Asia? How do you go about, getting talented fund managers?
Okay, this maybe anybody want to field? Go ahead. Hideaki? Okay, you're fund managers. You should not be answering that questions. Then it will just be either Peter or Praneeth.
Go ahead. Okay. If I got the question correctly, the question was
How do you pick?
Fund managers? I mean, it's pretty standard across the world. You go, you obviously look at the broad macro in which the GP is operating and the strategy, but more specifically, I guess we like to see some sort of investing history before we, as a team, and if possible, some sort of a track record of exits, as Mr. Bastin mentioned, at least one exit, so that we feel that the team has execution experience over a full cycle. Obviously, in a short period of 5-6 years, as a fund manager, that may not be possible. But those are the things. But we clearly focus on the fact that team has an articulate strategy, which is in compliance with the overall opportunity that persists for whatever that they're pursuing, if it's a country-focused strategy, so on and so forth. But we look at the team stability, their ability and operations of having worked together over a full cycle, at least at a deal level, if not at a fund level.
Okay. You want to add to that, Peter? Or?
Yes, it sums up to basically we're assessing the institutional quality of the manager, whether the manager has prior investment history, and as well as when we're looking at the team, whether there is a right team balance from the economic perspective, as well as a team chemistry, how well they're working together. I guess taking it further, what's the sourcing capability, and what's been the sourcing method so far, and how is it, in terms of the track record, how replicable is it going forward into the next investment cycle?
Okay. One more questions before here.
When private equity started in Asia, in Southeast Asia in the 90s, early 90s, I recall that they were still entertaining deals as small as $1 to $3 million. 7 years down the road, they were saying, I will not touch anything below $25 million. It's not worth my time. Given that funds are downsizing, is there a chance for deals that are in that range? And how do you go about tapping or getting in touch with the prospective investors? Because it seems that sending emails does not elicit any response at all. I mean, not even to look at the placement memorandum prepared by the initiator.
Okay, thank you for the questions. By the power of the moderator vested in me, I'll ask Dr. Chi and Mr. Fujiyama to answer that.
Well, first of all, I think private equity is very broad, ranging, from the early stage sort of early stage venture, which is the space that we participate in, to sort of the buyouts on the other extreme. So depending on the nature of of the deal, we do invest in the sort of US $1 to $5 million range, being an early stage investor. So yeah, and there are quite a few funds like us in the region. So yes, I do say there is an opportunity for sort of smaller deal sizes. As far as contacts, I think email is still the most efficient way. I get 600-700 deal proposals a year. But I'm generally good with sort of filtering through the mechanics and trying to reply. It may not be sort of on the day itself, but eventually sort of get back to most people.
I think on top of that, the comments, and of course it depends on the what kind of value we can add to our investee. So although amount may be some small, and investee will feel maybe size of our investment small, but if our value is greater than the amount of the money itself, then they definitely will accept our investment.
And mode of communications, letters or
Well, later our email is the definitely
or
we
Twitter now, Facebook?
definitely we do the more the face-to-face meeting.
Oh, face-to-face meeting.
Yeah.
Okay. Well, before I close the sessions, I would give 2 minutes each to the panelists to have concluding remarks, starting from Joy.
Yeah, I think just going back to what I mentioned before in key considerations that we're looking at, especially in Singapore being in one of the hubs of Southeast Asia, the regulatory oversight has become an issue for investors and complying with the more stringent requirements, including those in the U.S. When you have U.S. investors involved. So from our perspective, make sure you have competent legal counsel.
Like Jones Day.
Like Jones Day.
Okay.
Both from the international
just
perspective.
to be clear.
But both from the international perspective and local perspective. Both important points. Thank you.
Thank you. Peter, it's okay to advertise a little bit also.
Sure. Well, thank you for having me on this panel. I think from as I mentioned about the comparison with Korea, I think Southeast Asia is a market that will be successful in private equity. It's just a matter of time. And I think it will take some persistence in just legging out the lack of LP appetite in terms of the fundraising front. But I think, even though at the moment it's all China and China, to a certain extent India, I think, fund of funds as well as other LP institutions will come to realize that, private equity in Asia will not be just defined by China. And Asia is not just one country. Hence, I think, from PineBridge's perspective, we do see a lot of potential of finding great risk-adjusted return in Southeast Asian market, and hopefully, there will be more proof of concept through exits that will highlight the return potential of the Southeast Asian market.
Thank you, Hideaki.
Yeah, thank you very much for the inviting this event, and we have been in the market for the last 20 years, and now we also try to set up another fund to target in the Southeast Asia. So I understand that there are a couple of investors to the funds, and also there are some
like on your left and on the right.
There are also GPs in here. So of course, we sometimes compete with the other the fund managers, but also sometimes we also share the same opportunity with the other GPs. So I hope really that's to get in know each other after during this event.
Thank you. Chip.
Going back to the macro issue and the earlier question, sort of, is this time different? Did we learn the lessons from sort of the Asian economic crisis? I think I believe this time is different, and if you look at how private equity has evolved in Southeast Asia over the last 2 decades, the key difference is the economic growth this time round is driven by domestic consumption, and that is where we see the opportunity as where it is. What it was before was sort of the sort of Asian tigers, Singapore, Hong Kong, Taiwan, South Korea, was really about manufacturing, really about leveraging Asia as a low cost base, and China sort of is fulfilling that role now, and sort of as the powers shift. China itself and India as well is seeing domestic consumption fueling the economy, and that is no different in Southeast Asia, and I think that will continue to sort of drive the economy. So that I think is the fundamental difference as to what it is now than what it is before.
Okay. Thank you.
I 100% agree with Jeffrey's comment. I think that is seemingly very different in this cycle, and that's why I think we are also focused on specific opportunities which are domestic consumption related, which seem to be much more sustainable over cycles, at least for the coming cycle here. And with that, some of the sub-economies in Southeast Asia will get there earlier, some slowly, and some probably will still remain small and boutique and niche, which is fine. They probably over a longer period of time may not be able to attract that much institutional capital just because of the scale and the fact that they still remain niche. But some of them are already there and others are getting there quickly.
Well, thank you. And hey, good news, we're back on time. At least I did my job moderating. And with that, please join me in applauding and thanking the panels for wonderful presentations. And I turn the floor back to the chairman.